George Jarkesy, a purveyor of truth.
What we're lacking in our country right now is bold leadership that wants to get the job done.
A defender of capitalism, a crusader for the American way.
The United States of America is the only country in the world based on an ideal and not on a nationality.
This is the George Jarkesy Show. Call now, 855-943-6743. That's 855-9-GEORGE. Now, here's your host, George Jarkesy.
Hey, welcome to the George Jarkesy Show. We are glad to have you. I gotta tell you, I enjoyed the National Eagles and Angels luncheon today in Houston, Texas. For all of my listeners that joined, for all the members that came, thank you. I know that you were educated, you were informed, and you walked away learning something that could help you make money. I've got my co-host Dwayne DeLotte with me.
Yeah, fantastic meeting today with two incredible companies that presented, EnerJex and Geo Resources, and we're lucky we got the actual CEO of EnerJex in today, so we're very excited about that.
Listen, I want to hear from you today. Send us a Twitter, and my handle is @Jarkesy. It's Jarkesy, or you can call us toll free, 855-9-GEORGE. That's 855-943-6743. You know, one of the topics that we talked about at the meeting today with the members of the National Eagles and Angels was the crisis our country's in. We're going to be talking about the budget a little bit here today, but today is the 1,065th day that our great nation has operated without a budget. And it's just an unbelievable that our large country just spends and spends without any guidance. And so my advice, contact your congressman, contact your senator, and make sure that you tell them this is unacceptable and we can't have this anymore. You know, on today's show, we're the most powerful country in the world, but we are losing the war against hackers. Now, that may come as a surprise to you. We're going to talk about it here today. Also, even the Democrats now are running from Obama at this point.
This is capitulation almost.
Now,
very interesting.
it's nice to see the media, mainstream media, not the George Jarkesy Show, come from way over at socialism, communism left to something more that smells and looks like our great nation. All right? And we're seeing it in the Supreme Court this week. We're seeing it as the media moves away where Saint Obama is no longer all that saintly. So we're going to be talking about that today. You know, we got great guests up here today. We got Robert Watson, who's the president and CEO of EnerJex on today, and he's going to teach you something about what's going on in the oil business here in the United States and talk about his company. Also, we've got Matt Ferris, and he is the chairman of the United States Gold Bureau. He's going to be talking about metals here, gold, silver, platinum. You want to stay tuned in this inflationary environment. You're going to want to make sure you don't miss anything today on the George Jarkesy Show. You know, we are going to have an incredible show. We got great guests, so stay tuned. Now, you know, the head of the FBI, top cyber cop is his name. He came out with a negative appraisal of the nation's efforts to stop computer hackers.
All right.
He said, and I quote, "We are not winning." Sean Henry, who's pretty much about to leave the FBI and will no longer be the FBI's top cop anymore, said that the current public and private approach to fending off hackers is unsustainable. He also said, "I don't see how we are ever going to come out without changes in technology, changes in behavior, because with the status quo, it is an unsustainable model." And unsustainable in that you never get ahead, never become secure, never have a reasonable expectation of privacy or security. Let me say this. This is the top cop at the FBI for internet cyber security.
All right. Well, to me, this goes exactly to national defense. We talked about this earlier this week. The Constitution, number one thing, Representative Bill Ford said this week, the number one thing the United States is supposed to do is protect its citizens. This goes to that type of protection. It really should be considered national defense. Therefore, a little bit more money needs to be directed toward this than other social programs and et cetera, et cetera. That's my personal opinion.
I can't believe this line. I got to read it again. The head of the FBI's top cyber cop says, unsustainable, and that you never get ahead, you never become secure, and you never have a reasonable expectation of privacy or security. Then an expert named Jason Lewis, who's a senior fellow at cybersecurity at the Center for Strategic and International Studies, said that as gloomy as Mr. Henry's assessment may sound, I am actually a little more gloomier. I think we've lost the opening battle with the hackers. And Mr. Lewis went on to say he didn't believe that there was a single secure, unclassified computer network in the nation.
Well, how does that make Chase Manhattan feel?
So this
JP
is
Morgan. I don't
yeah.
Wow.
Yeah, this is an article out of the Wall Street Journal by Devlin Barrett. I encourage you to read it and get informed as you try to expand your businesses and think about the cybersecurity there. Now, Obamacare is, taking a beating at the Supreme Court because it's unconstitutional. Not to mention that one of those Supreme Court justices shouldn't even legally be there, but we're not going to go off on that tangent. Obama's budget was defeated. 414 votes in Congress to zero. To zero. Not one Democrat voted for their own president's budget. Now, maybe they're getting tired of wasting money.
Maybe they want to get reelected.
Maybe they want to get reelected.
That might be it.
It looks like the Obama ship is sinking. There's just not enough spinster to keep this thing afloat anymore, President Obama. And, I'm hoping that we will have a little bit of bad Obama blues here today to celebrate the fact that even his own party is abandoning this president. And hopefully that'll mean an end to the regulation tyranny that small business and emerging business have been suffering under in the nation going forward. So, we've got a question of the day real quick. Dwayne's going to put it out.
Yeah, George, our question of the day is, why did even the Democrats not pass or vote for President Obama's budget bill?
Listen, send us a tweet at Jarkesy, Jarkesy is my Twitter handle, or call us toll free, 855-943-6743. That's 855-9-GEORGE. And also, if you want to listen to today's show, yesterday's show, you want to hear the bad Obama blues.
You want to hear James Carville impression? You got to listen to the yesterday's show.
Or the President Obama on our show.
That's right.
GeorgeJarkesy.com is the website. That's GeorgeJarkesy.com. Go there, sign up for the free newsletter. So listen, don't touch that dial. It could cost you money.
Have a good business.
Now, here's your host, George Jarkesy.
Welcome back to the George Jarkesy Show. I would like to thank our affiliate, KTEK in Houston, Texas. That's 11:10 a.m. 11:10 a.m. here in Houston. They were at the National Eagles and Angels Luncheon at here in Houston today. And that matter of fact, not only that, but some of the listeners came out today. We had two veterans stop by and have a cup of coffee. Great guys. I want to thank you for stopping by the George Jarkesy Show. And thanks, KTK, for all your support. Also, I'd like to thank CRN Talk Radio. That's crntalk.com. We are on CRN 5, which is Lou Dobbs' old spot. Thank you, Lou. We appreciate you. We're going out nationwide on CRN. Also, we've got a question of the day. Why did not one single Democrat in the House vote for Obamacare? You can call us at 855-9-GEORGE. That's toll free, 855-943-6743. Or send me a Twitter. My handle is at Jarkesy, Jarkesy. Also, listen, I know a lot of our listeners did real well in the late 90s, the 2000s, things ran up. You bought that second, third home. Maybe your kids have grown up. You got that 5,000 square feet. Look, I wanted you to think about divesting of it, all right? I don't think real estate's going up anywhere very quickly. I know that the burden of insurance, the burden of homeowners association might be taxing you. And even if it's not taxing you, the viable thing to do, the smart thing to do economically is to lower your burden, all right? Call the guys over at Homevestors, 800-580-6509. These guys can usually close a deal in about 7 days. We've had a lot of good response back from the way they do it. They will buy your house. So call those guys, 800-580-6509. That is Homevestors. Listen, I am so excited. Today at the National Eagle and Angel Luncheon, we had a very special guest, Robert Watson Jr. He is the president and CEO of EnerJex, Inc. Their symbol on the OTC is ENRJ. Robert is a graduate of Southern Methodist University. EnerJex is a domestic onshore oil company in Kansas and in Texas. The majority of the interest is over 500 producing oil wells. And what I got to tell you is this fits one of my investing criteria. These guys own the majority of the company. They put up their own money. You know, you're investing alongside them. This is not a CEO or a management team that owns 2%, right? Is looking for a handout with options. These guys put up their money. They own a big percentage of the company. They've got a lot of upside, and I think that's why they're going to win. So, Robert, welcome to the show.
Thanks, George.
So give our listeners an overview of EnerJex.
Sure, we're an oil production company, as you mentioned. We've got 2 producing projects in Kansas that would be considered long-lived, stable oil production, where we have over 500 locations that we still need to drill. Those locations would be considered proven locations. And then we've got a higher impact project in Texas. It's a little bit earlier on in its life, but very excited about its potential. We currently have 7 wells producing there, and we're still trying to delineate the economic limits of the field. But we have a ton of drilling to do, and in this environment, it's very exciting.
But you've rapidly grown this company. I mean, when did you take over the company, and tell us about the progress from where you started and where you are today?
Sure. My partners and I took a significant equity interest in the company at the end of December 2010. At that point in time, the story was very much a turnaround story. So we spent last year working really hard to fix a lot of things and start a capital program and fixed a lot of balance sheet and liquidity issues. We've done that. So today we sit here, and I believe we're poised for significant growth. We've made that turn. Throughout last year, we significantly increased our production revenue, cash flow, while delevering the balance sheet. And now we're positioned to be pretty aggressive with our drilling program.
And so, what your revenues right now are running? What?
A little over $6 million.
Okay. And you know, in this environment, you've heard me talk about it here on the show. In this environment, it's very difficult to get capital to grow. Now, oil companies, it has been getting more available for oil companies, but you guys are pretty much set on capital right now with the lines of credit and equity you've done. Tell us about that.
Sure. A couple of things. We have raised common equity through pipes during 2011. Some of that capital was used to fund our drilling program. We used some of it to repurchase shares in a very accretive way for our shareholders. We also have a $50 million line of credit. We only have $4.5 million outstanding on that, which we plan to use once we get a little bit more critical mass. We can use that to develop our assets. And then another very creative thing we did, it is a challenging environment for companies our size to raise capital. We created a very unique structure by forming a partnership, contributing assets to that partnership, and using that partnership to pass the tax benefits to our investor. So we effectively monetized a net operating loss carry forward that we had by doing it this way, and the benefit to us was we were able to raise capital at a cheap cost of capital, and our investors are very happy because their after-tax returns are phenomenal.
You know, that's very creative. I'll tell you, I spent some time with Robert today at the meeting, and it's not often that you have a guy who understands oil and gas and understands complex M&A. But he cut his teeth at CIBC, right?
That's right. Started as an energy investment banker, and then spent about 6 years in the private equity world, and had an entrepreneurial itch and walked away from that and started out on my own.
Yeah. So he grew up in an oil family, which a lot of families in Texas, second, third generation oil. So he understood, and he just put up his hand third generation oil.
Yep.
And but so often those guys, even though they're brilliant, don't get the finance game. And he's doing things on both sides, right? He's growing by the drill bit. He's bringing on reserves. He's bringing on proven reserves. He's bringing up production. But in addition to that, he's maximizing shareholder equity and raising capital creatively, which is good for the shareholders. You don't hear of a young company like this where the group put up the money, and not only did you put up all this money alongside the investors, and now the management owns this piece, but you did a stock buyback. And that tells you this guy's buying back the stock so that there's less out there because he believes it's going a lot higher, right?
That's right. And I think the message we try to communicate to the investment community is we are big shareholders, we're long-term value creators, and we're going to look at every way we possibly can to drive per share growth and shareholder value. And it governs every decision we make, whether it's a drill bit decision, repurchasing some shares, how we raise capital. We want to make sure that every dollar we raise, we're getting a return on.
Well, it looks like you're doing a great job. I was looking at your PV10. Your PV10's running around 50 plus million. Your current market cap's 50 million. So that means is that his present value is 51 million, and that's about what your market cap is. Not giving credit to all the future things you're doing and all the things you're working on.
That's right. And that number, it's kind of interesting timing, but we're going through our 10K process right now and our reserve redeterminations. All that information ought to be coming out within the next week. But the number you referenced, that 50 million, is as of December 2010. It excludes one of our Kansas properties, it excludes our Texas properties, and it excludes all of the work that we've done since we took over. Now, it also does include some assets that we sold, but I think at the end of the day, if you're buying our stock at this current price, you're basically buying at our net asset value as of 2010 before we did all this work.
Yeah, and that's a net asset value in an inflationary environment where I think oil is going to go a lot higher. We'll talk about that, again on the show later. But, President Obama will have you believe that he's been great for the oil business. But tell us the truth. I mean, really, it's technology that's gotten so good that's made you guys effective in Kansas, right?
Well, in both areas. And contrary to what he said in the State of the Union address, I don't think that the government invented fracking. But we are using frack and stimulation technology in our project in Texas. What we're doing in Kansas is all secondary recovery. It's a water flood technology. I kind of equate it to a manufacturing operation. We have very little exploration risk, and we just have to keep our costs down as we bring these barrels of oil to market. All
right, now listen, our listeners will want to know how to learn more about EnerJex. How do they do that?
First off, read anything that we publicly disclose. We're a public company, ENRJ. Also, we've just completed a redesign of our website that should be up soon. That website's www.enerjexresources.com, ENERJEX.com. And we communicate regularly with the marketplace through press releases and through our website.
All right, listen, Robert, thanks for being on the George Jarkesy Show. You can learn more at ENRJ. Is there symbol? Go to Yahoo Finance or something. ENRJ or EnerJex at ENERJEX.com.
Resources. EnerJex Resources.
EnerJexResources.com. Listen, thank you so much for being on, and we appreciate it.
Yeah, George, thanks for having me.
All right. So, I want you to think about giving money. We're behind helpingahero.org. They're an organization that builds homes for veterans. $1, $2, $5, $10, $1,000, $1 million, whatever you could spare, they're taking care of our vets. Helpingahero.org. Listen, don't go anywhere. Don't touch that dial. It could cost you money.
Now, here's your host, George Jarkesy.
Welcome back to the George Jarkesy Show, everybody. We are glad to have you. We've had a great day here in Houston, Texas at the National Eagle and Angel Luncheon. For those of you that missed it, I hope you'll catch the next one. You can join at eagleandangel.com or you can call 888-465-6322. That's toll free, 888-465-6322. Also, we got the question of the day. Why did not one single Democrat in the House vote for Obamacare? You can call in or you can tweet it. You can send me the Twitter. My handle's @Jarkesy, Jarkesy. Also, you can call in toll free, 855-9-GEORGE. That's 855-943-6743. To some of those callers I didn't get to you in the last segment, I'll try to get to you after this next guest. Also, I'd like to thank all our listeners at Sacramento, California. That's at KSAC, KSAC FM 105.5. We've seen you guys have lit up our website, so we appreciate it. Keep listening and keep sending us messages. So we have a guest that joined us today, and you're going to be hearing more from this organization. But we're lucky enough to have the chairman, Matt Ferris. Matt is the chairman of the United States Gold Bureau. He is a serial entrepreneur, which makes him a great eagle and angel. He also has significant experience in international business, especially in Asia. He is an MBA graduate from the University of Georgia and has a Bachelor of Science degree in accounting from California State University. And Matt, welcome to the show.
Thank you, George. Thank you for having us.
A lot of my listeners know how I feel, right? You know how I feel about what's going on around the world. The world governments and the federal banks around the world are buying gold, and they're buying it at 500% more than they have over the last couple of years. They're not selling anymore, they're buying it. Why are they buying it? Because they know that their currency is not going to be worth as much compared to gold in the future. And that's what they're out doing, right? 4 of the 5 largest oil producers, the 4th and 5th, Iran and Venezuela, are taking payment for oil, which has traditionally been done in US dollars. They're taking payment for oil in rupees, in renminbi. They're taking it in copper, which means that they're not taking it in dollars. So, you also know Europe. Greece is out there. You've got the pigs. Remember, right? Portugal, Ireland, Greece, Spain, and I would add France to that list. No offense. I love France, especially Cannes. It's one of the best cities in Europe. But the fact is, all in economic trouble. So that only leads to one thing: inflation. And then you throw in the government spending and the budget and what's going on there. We're in an inflationary environment, just nobody's talking about it. So we've got Matt Ferris with us from the United States Gold Bureau, and we're glad to have you. Tell us, I advise our listeners to put about 10 to 15% of their net worth in gold. But when I say gold, I'm really talking about metals. What do you tell people when they look at making an investment in metals as to how they break that up between the various metals, between gold and silver and what have you?
Sure, George. When folks call our firm, we talk a lot about gold, platinum, and silver. There's various reasons why you want to own each one. Gold is generally an investor-grade metal. It's traded mostly for its investor value. Silver's got a lot of industrial usages, and so does platinum. You saw platinum take a dive down from its highs around 2,400. It was about in peak in 08 of 2276, if I remember correctly. And that dropped because of the fact that platinum is mainly derived by its usage. The value is derived, a lot of it, from the usage of platinum in catalytic converters in cars. Now, once the automobile manufacturers stopped producing cars, what happened? Not as much platinum needed, so that drove the price down. Now, that's coming back a little bit. Platinum is 12 times more rare than gold. Gold would be the next most rare, and then after that silver, which is fairly abundant. You've seen silver trade, up. We hit highs up in the 50s or almost 50. It's trading down around $32 today, I think, on a per ounce basis. But one of the things that when people call us and they want to talk about inflation, they want to talk about what to do with their portfolio. We advise them similar as you just said. 10, 15% in metals is never a bad place to be. As far as what allocation you put across that, it depends on your particular situation, what you're trying to accomplish. One thing we do, now I'm a little bit biased, our firm does physical precious metals delivery. We don't do exchange traded funds, and there's specific reasons we don't do that. We believe that if you're going, for what allocation you're going to have towards metals, you want to have that in your physical possession. In fact, something you mentioned earlier on the beginning of the show, I was listening very closely about hackers online and the statements you made from the folks from the FBI. It really got me thinking that if you don't have some physical control of your own wealth, how can you be certain that someone's not going to hack in and get a hold of your wealth, whether it be your cash in your bank, whether it be your equities account, etc. Now, that's unlikely to happen to a lot of people, but it's certainly plausible that it could. And when you own physical metals, you have those metals in your possession. The only way someone's going to get it from you is to break into your house or your safety deposit box or your vault or wherever it is you got it. Mm-hmm. So.
Now, with a different investor, let's say you've got an investor that's got $100,000 in his savings. Mm-hmm. You would probably advise him different than a guy who had $10 million. What's kind of the difference of investor between those? Would they buy ounces or a tenth of an ounce? Would they buy silver? Or how would you look at? And I know every portfolio is different.
Absolutely.
But what I'm saying is even a smaller investor can buy metals, and it's just not for the really wealthy investors.
That's right. One of the things we would focus on, more so than the dollar amount that they're looking to invest, is their time horizon. And whether or not they're looking at a short-term hold or a long-term hold. And that varies, but we generally talk over 5 years or under 5 years. If you're going to be getting into something that you may need the cash, if you might need this money tomorrow, or you may need it next month or 6 months from now, we would always advise people to get into a metal that trades very close to the spot price, where there's a thin spread on that. And that gives them the ability that while we can't predict the price of what it's going to be in the future, although generally we believe it is going up. And I say that because when you look at just our revenue stream of our company, the revenue stream is largely net buyers, not net sellers. So it is substantially more buyers than sellers, and that's been that way for quite a while.
Well, Uncle Sam is a huge buyer, right? I mean, it's hard to compete with Uncle Sam.
Or China or India. In China, they're advising their individual citizens to buy gold. You don't hear the U.S. government saying that too much because, of course, they want you to remain in the fiat currency. But when you're talking about various types of metals for the different portfolios, again, we'd focus on time horizon. We'd focus on what you're trying to accomplish. Is it, for example, one of the terms our precious metals advisors would ask, are you looking to create some legacy wealth? Are you looking to pass this on to the next generation? What are you trying to accomplish in those regards? Is this just a hedge against the dollar? Are you trying to make, are you making a speculative move? Are you trying to just ride the spot price of gold or silver or platinum, whatever it may be? That drives the decisions a lot more than the dollar amount. The fundamentals across the dollars, it's just simply a percentage of allocation at that point. For the guy that's got 10 million, hey, he might want to go 10, 15%, 20%. I've got some friends out in California that got it buried in vaults, a couple $100 million worth. So
right. Now, the time horizon, when you talk about liquidity, and somebody buys gold from you or platinum from the U.S. Gold Bureau, what is the time horizon to liquidate that? They need the money, they're going to buy a house, they put it in gold. How long does it take to liquidate, let's say, gold?
When you're talking about physical metals, it's pretty simple. It's simpler than most folks think. Now, it's not as easy as just pressing the enter key on your computer and, if you haven't been hacked already, and selling at that moment. But you just call a firm like ours, give us a call. Tell us, here's my position. I've got 100 ounces of gold American Eagles I want to sell. We'll give you the approximate price of the metal at that moment. However, we don't lock it until it's received at our firm. Until it's in our hands, we inspect it. Our vault room operations takes a look at it and says, "Yep, this is 1 ounce gold Eagles. Great." We'll then call you on the other, call you and lock the trade on the other side, and then you're locked. We'll clear in a couple of days, and then the funds we'll send it to whatever bank account you want it to, wire it to your account.
Oh, that sounds relatively simple.
It is relatively simple. I mean, it's a matter of just getting it physically delivered over to our firm, and which is FedEx box. It's not that hard to do.
All right. Well, listen, Matt, thank you so much for being on the show. We're very excited about United States Gold Bureau. You can get to their website by going to NEAA Gold. They are the gold supplier for the National Eagles and Angels. Also, you can call in 800-752-2254. That's toll free, 800-752-2254. Matt, thank you so much for being on the George Jarkesy Show.
Thank you, George.
Up next, we're going to have Stock Watch, and that we have been knocking it out of the park and making money. So don't go anywhere. It could cost you money.
There's something that I got to say.
Now, here's your host, George Jarkesy.
All right, welcome back to the George Jarkesy Show. We are glad to have you. I've got my co-host Dwayne DeLotte with me.
George, we are here at the NEAA event today. It was a fantastic event. I've got a question of the day for us. Why did even the Democrats not vote for the Obama budget? I've got Gary, who says, Gary downstroke Repub says even Democrats do what's right sometimes. And I have at POTUS Down, who says, hopefully this is a sign of things to come.
Yes, I hope the Democrats will abandon their far leftist thing and get done what's in the best interest of the country. That's less regulation and more backing of small business here in America. And I hope that movement catches fire. I hope it catches fire like the SOPA did, that put Congress back on its heels earlier this year when they were looking at the websites and doing more regulation there.
I'm just looking at Twitter feed in general, and I see this guy at Boomer Jeff says, it appears the Supremes will finally draw a line blocking progressive dream of government with unlimited power. That brings up 2 points in my mind. One, this is a critical week for the whole president's whole agenda with Obamacare, and I really do think, and I didn't think this was going to happen, but I think it's going to it's going to be declared unconstitutional this spring. It'll be till spring.
It's fantastic.
It'll be spring till you get the decision. Mm-hmm. They deliberate it now, then they talk about it.
So what you're saying? So what you're saying is, pull on that Obamacare, pull. right?
Yeah, yeah.
It's going down.
And then the next one is when you start seeing the president's supposed to be the leader of his party. When all of the members of his party, not a single one of them, stand up for it, I don't care what kind of chicanery or whatever they say the other side's doing, what does that equal?
Yeah, absolutely.
You better pull another one.
Okay.
Pull! I love
All
it.
right. So Obamacare looks like it's out of here, I got to tell you. But still, even though Obamacare is on its way, I still think that you got to look out for inflation. That doesn't do anything for Europe. That doesn't, Obama getting out of the way only lets the foot off the throat of the American small businessman. But there's still a lot of economic issues. That's why I think inflation's going to happen. That's why you should call 800-752-2254. That's NEAA Gold, the guys over at U.S. Gold Bureau. You can get the website is neaagold.com, and that is supported by the United States Gold Bureau. 800-752-2254. So, it's been just a great day here at the Eagle and Angel Luncheon. We have had a just wonderful guest. We've learned a lot about the energy industry. The American Oil Man's done a great job with technology and implementing technology to squeeze out more barrels for the effort, more barrels for the capital. And I think there's a lot of upside value in emerging growth oil and gas companies here in the United States. There are a number of them in the microdynamic portfolio, which is put out by the Eagles and Angels. You can learn more there at eagleandangel.com.
Stockwatch is brought to you by the National Eagles and Angels Association. And now, Stockwatch.
That's right. It's that time of day for Stockwatch, and this is a time of day where we get those picks of stocks that we think might have been undervalued. It could be coming from our chief analyst, Clay Mahaffey, or it could, we've talked about him here. Clay, are you with us? Clay Mahaffey, can you hear us?
Can you hear me?
Well, we might be. Oh, there's Clay
There he
right
is.
there. There he is, the man himself.
All right, so Clay is the chief analyst of the National Eagles and Angels, and he was here in Houston today, and he was sharing his wisdom with the members about the microdynamic portfolio which he's come up with. You've seen phenomenal returns with that, and the members of the organization are making a lot of money off of your microdynamic portfolio. Just give us a little quick overview of how you do it. I mean, you consistently are making a lot of money for our members. What's your secret?
Oh, well, in microdynamic, George, we're trying to capture situations where the stock is underpriced and ride it until I think it's overpriced, and the market is fairly volatile, and these over and underpriced situations occur fairly frequently. So that's kind of the strategy, the overview.
Well, Clay, this is Dwayne, and my thought is, and I've heard you say this before, you might want to just elaborate on it a little bit. A lot of times, these are companies that are not well covered by the market. They're not traded in huge volume. So I believe what you're saying is you're exploiting some pricing discrepancies because of volume. And when we say volume, we mean the amount of shares traded every day. Is that right?
That's true. That's true. That's true to a certain point. But quite a few of the stocks in the portfolio trade $2, $3, $4, $5 million per day. So
right, but they're not like Apple where they're trading.
Right. 50 million a minute probably, or something.
But you're picking companies that you believe in. You believe in these companies today. You believe in them. There's a reason you're picking them, and the reason is you believe that there's that growth strategy, and of course you're a smart enough trader to kill the losers.
And they're undervalued.
They're undervalued, and last year, the longest period I held any stock was 7 months. So it's
all right. So tell our
not
listeners.
So
7 months was the biggest positions.
Yeah.
So tell our listeners, what do you have for us today? What kind of company are we looking at today?
This is a grocery store. Super Value trades on the New York Stock Exchange, symbol SUV. Closed today $5.92. I like this stock because of the high yield and the recovery potential. This is one of the largest supermarket chains in the country. They do $37 billion. Their flagship chain is Albertsons. They've got 300 stores. That's the good news. The bad news is the stock is down 50% from its high 6 months ago. It's down 25% this year. And the reason is they've had slow growth due to competition from Walmart, and they've had lower profit margins due to higher food prices. And that caused Fitch, a credit rating agency, to cut their bond ratings in late January. Immediately, the analysts reduced their price targets for the company, and the company quickly announced a job cut in response to that, but it's not really enough. Their strategy to get out of this hole is building new, additional, deep discount stores called Save-A-Lot. This is probably a good idea in a recession. They really focus on the value shopper. More good news is they have no debt due for 2 years, so they have some breathing room. And even better, this is the reason I like the stock, George. The USDA expects lower corn, beef, and grain prices this year. That will help. That will immediately drop to the bottom line and help these supermarkets compete with Walmart. And I think the catalyst here is the further management actions to reduce their costs and improve the margin. The good news is you're paid to wait on this stock. They have a dividend of 35 cents, which yields 5.6%. I think it's a secure dividend. And while you're waiting, I think the upside, it can return to its high. There would be a 50% gain. On the downside, it's probably only 10%. And you're getting the dividend while you wait.
That sounds like a great story. So 5.6% dividend while you wait. If it goes back to where it was, you get a 50% upside. You think it's got about 10% to the downside. What about the growth story? What kind of revenue growth are you expecting from this Save-A-Lot expansion?
It's hard to say, George. This is a very mature industry. I would, 2 to 3%.
All right,
on the top line for the entire company.
Yeah.
They're already doing $37 billion, so it's not like a Whole Foods or something like that coming out of the block growing 20-30%. This is
Gotcha.
This is it's a dividend play.
Yeah, well, that's why that 5.6% dividend is there, because it is very stable and they don't need the capital for growth, and you got a lot of upside. So the symbol again is SUV.
That's it.
SUV, and the company is Super Value. Clay Mahaffey, listen, thank you very much, and we really enjoyed having you at the National Eagle and Angel Luncheon today. You did a great job, and thank you to all the people that attended today. And if you didn't attend, I encourage you to join. Go to eagleandangel.com or call in 888-465-6322. That's 888-465-6322. Listen, it has been just a great show today. Tomorrow, we have the Chief Investment Strategist of Money Map Press and the author of Fiscal Hangover. You're not going to want to miss this. We've got Keith Fitzgerald on tomorrow. We're going to have Dwayne DeLotte here, my co-host, tomorrow. You bet. You can listen to today's show at georgejarkesy.com. You can sign up for the free radio newsletter there at georgejarkesy.com. You can listen to today's show or any shows, and we have a number of contributors that are great. Also, follow me on Twitter. It's at Jarkesy, Jarkesy. We really had a great time here in Houston today at the National Eagle and Angel Luncheon, and our guests have been just fantastic. I'll tell you, you couldn't ask for a better group of entrepreneurs than what's going on in the oil and gas community. The guest we had on here today, Robert, was wonderful. And
EnerJex and GRE sources, fantastic stories.
Fantastic stories. Listen, we're looking forward to hearing you tomorrow. We want you to join us. If you don't, it could cost you money.